St. Joseph's College for Women, Autonomous, Vishakhapatnam. Welcome to St. Joseph's open web-based learning platform, So E-Learn, for a soulful and enriching e-learning experience. National income, concepts and measurement. This presentation will cover national income accounting. We will explore its importance in economics. Let us observe what is national income. National income is the total market value of all goods and services produced in a country during a given period of time. It explains the direct relation between GDP of a country and general welfare of the people living in that country. Core concepts of national income. There are five main concepts of national income. Different concepts of aggregative incomes suit different purposes of macroeconomic analysis. The various concepts are GDP, GNP, NNP, and NI, personal income, disposable income, and per capita income. Now we will look into GDP. Gross domestic product is the market value of goods produced within borders. For example, US GDP in 2022 was $25.44 trillion. Next, GNP, gross national product, is the market value of goods produced by resident. The difference between US GDP and GNP is typically around $30 to $50 billion. Next, NNP. Net National Product is a GNP minus depreciation. Here depreciation or user cost, charges for renewal and repairs must be subtracted from the GNP to obtain NNP at market prices. Disposable income. Disposable income is that part of personal income which is left with the individuals after payment of all direct taxes like income tax, property tax, etc. Generally, disposable income is either spent for consumption, reserving the remainder for saving. Next one, per capita income. The per capita income is the average income of an individual in a country. It is calculated by dividing national income by population of the country. This concept is a good indicator of the average standard of living in a country. Next one, personal income. To know the personal income equal to national income at factor cost minus undistributed profits minus corporate taxes minus social security contributions plus transfer payments. Methods of measuring national income. There are three methods of measuring national income: product method, income method, expenditure method. Product method. The value added at each stage of production across industries. Income method. All income earned within a country including wages, salaries, profits and rent. Expenditure method. All spending on final goods including consumption and investment. Here, national income can be looked in any one of these three ways, as the national income measured by adding up everybody's income, by adding up everybody's output, and by adding up the value of all things that the people buy and adding in their savings. The production value added approach. Definition: deduct the cost of intermediary goods from the gross value of output. Formula: the value added equal to gross value minus intermediary consumption. For example, wheat. Farmer sells wheat to miller for $50. Here the value added equal to $50. The income approach. In this method, the incomes earned by all factors of production are aggregated to arrive at national income of a country. The four factors of production receives income in the form of wages, rent, interest, and profits. Add all income received by production factors. This includes compensations of employees and corporate profits. The expenditure approach. In this method, we add the personal consumption expenditure of household, expenditure of the firms, government purchases of goods and services, net exports plus net income from abroad. Calculate the total spending on final goods and services by households, businesses, government, and the foreign sector. Challenges in measuring national income. Data collection. Difficulties in gathering accurate and timely data. Double counting. Risk of including the value of intermediary goods more than once. Inflation. Changes in price level can distort national income figures. Significance and uses of national income data. Economic planning. It helps to formulate economic policies and set targets for growth. Performance evaluations. It provides measures of a country's economic performances. International comparisons. It allows comparisons of living standards across countries. National income data offers insight into a nation's economic health. This facilitates informed decision making. Thank you.